Hello YouTube. In today's video, I'll be covering the UK stock market, the FTSE 100. So I'll be doing my technical analysis, and I'm not really impressed by the FTSE 100 compared to, say, the S&P 500. We can compare those two in a minute. Basically, looking at percentage gains from basically the peak in 2000. We've gained approximately 20% in the space of gained approximately 20% in the space of around about 20 years. Considering inflation during that time, the S&P 500 has grown considerably faster. So I'll just compare the chart. So I'm just trying to make the case in this video why most companies in the S&P 500 are not a good investment over time. And it's probably best to invest in the American markets. That's the purpose of this video, to compare that. So as you can see over time, the S&P 500, which is in the S&P 500, which is in the orange, has basically grown consecutively quicker because it has grown much faster over time. It's up 700%. In the same time, the FTSE 100 has only grown 136%. So as you can see, it's a terrible investment compared to the US main stock index, tracking America's largest 500 publicly listed companies. So let's just have a closer look at what's been happening recently with the FTSE 100. As you can see, recently we had this falling channel, this falling wedge over here. We broke out. At the moment, we're just revisiting. So, are brighter things ahead for the FTSE 100? Well, let's have a look at the individual names that make up the index. So first, let's have a look at Glencore. Again, with this company, I can see over time it's had its ups and downs. Basically, over time, it's not really been a very good investment to add to, unless you bought traded off the lows and obviously caught the dips. Let's go through the next one. So you've got Relx. This one's a good company. It's actually caught my eye because obviously we've got an established uptrend in this company. Let's just have a look at the revenues over time. The annual revenue has been growing gradually, as I can see from the charts. So yeah, it's been in a gradual uptrend. So this is a good company. But there are a lot of bad companies here which have been dead money. For example, Reckitt Benckiser. So let's have a look at this in more detail. So we've had a double top that looks like has played out. Yeah, we've had a double top, and that's playing out at the moment. Over time, this has been a good investment, but the fortunes have probably changed for Reckitt Benckiser. So we look like we're doing a change of trend now. It's going to a bearish trend pattern. If I do a measured move from there, from that neckline to the top there, and I project down, we've probably still got lower to go on Reckitt Benckiser. It's been a good investment over time, but it's not really that good at the moment. So next, we've got the London Stock Exchange Group, LSEG, and that's been an established uptrend over time, so that's not a bad company. Next, we've got National Grid. That's been an established uptrend, but as we can see, it's not done anything really since the best part of best part of 2016. It's not really done anything, so it's dead money compared to a lot of hot names that have doubled or tripled since then. So it's not a good investment, is it? We've got Compass. That's been in a gradual uptrend over time. That's not a bad company. We've got Prudential. Again, this one's not been a great investment, to be honest. Since highs in 1999, it's not really done a lot. It's basically gone lower. It's going low at the moment. Looks like it's broken down. So I don't see a lot of potential with Prudential either. Next, we've got Halion. There's very little history on this one. but looking at that candle, got a bit of a shooting star going on, so doesn't look like a great investment at the moment. We've got Anglo American, which has just gone sideways. So, but it's been a decent trade off the lows over here. Again, it's gone sideways for the best part of 15 years, so it's not been a great investment. It's been dreadful, really. So that's not a good investment at the moment either. As you can see with the FTSE 100, there's a lot of names here which have been dead money for a long time. I refer to them as dead money. There's exceptions, obviously. BAE Systems, basically defense company. They've done remarkably well over the recent time. If I draw this channel on over here, you can see we've been in an established uptrend, and I see greater things ahead for BAE Systems. Now, the banking sector has been really badly hit in 2008 with the financial crisis, the financial collapse of Lehman Brothers and Bear Stearns and the like. And a lot of these other banks basically have never really been able to recover. As you can see, I'm drawing this rising wedge into 2008. And we've just basically gone sideways since 2008. And there's nothing really exciting here. Is there a dividend yield on this? Yes, there is, of 5.04%. But again, it's not really a good investment because it's every single pattern is just breaking to the downside, to be honest. So it's not really been a great investment. Next, we've got CRH. This has been a good investment over time. I can see it's potentially got a greater side to become. Got a symmetrical triangle pattern here. It's retested it. It's gone higher. So this one's a good investment. Got Flutter Entertainment, home of Betfair and Paddy Power and Sky Bet and the like. So this one's gradually gone up over time as well. Experian, another good company. You can see there's an uptrend on this stock. So yeah, that's a decent investment. And then again, we come to the other banks. So NatWest, you can see there is a rising wedge over here, and it's never really recovered since 2008. It broke down. This rising wedge. What happens with the rising wedge? More often than not, you tend to break down. From a rising wedge, you tend to go up, and then you tend to maybe sometimes blow out the top. Sometimes you just break down, then you just tumble from there. That's the way rising wedges work. You can see this has been dead money since 2008. So again, not a good investment. And the problems continue with a lot of British public listed companies, the top 100 publicly listed British stocks. You can see there's a lot of problems over here. You've got Vodafone over here. You've got a head and shoulders pattern. It's been a reversal of trend, and fortunes have changed for Vodafone as other competition from other telecommunications providers has come through in the last few years. They've been challenging them on pricing and competition. You can see we've been breaking down. So again, Vodafone is a very bad investment. I wouldn't go short just over here. I think there could be a rally, but it looks like a bad investment. Barclays, again, another company that's basically gone sideways since 2009. It's just gone sideways. It's just been collapsing. Again, you had another structure over here, which you just fell out of in 2007, 2008, and you've just been stuck in a range. So again, it's not a good investment. There's better places to park your money, to be honest. And I'll be covering that in future videos, so keep posted to this channel from future updates. We go to Ashton Group, a company which I own in my personal portfolio. I expect big things for this company. And over time, as you can see the gradual uptrend. SSC PLC, again, another company that's pretty much not gone anywhere since 2008. So you can see there's a trend with these. British supermarkets, they have very small profit margins, and they're not really a good investment, really, are they? Because as we can see with the likes of this, there was a symmetrical triangle from 2006. And we've basically broken down, really. It's a descending triangle. Descending triangles often break down, and Tesco's never really recovered since. So wherever you go and get your fruit and fresh veg, they don't really have that really nice profit margins, to be honest. Next, we've got 3i Group. This has been a good stock over time. I can see there's been a falling wedge over here. and we've broken higher. Got Standard Chartered over here. The bank, and you can see there's been downside over here. There's been a double top or descending triangle of sorts, and we've never really recovered since. So it's been a bad investment over time, Standard Chartered. So British banks aren't good investments, guys. You need to invest in other things. Got Imperial Brands, again, smoke-free generation. There's been an emphasis on people quitting smoking for health reasons, etc. And we can see that basically there was a bull flag over here after a symmetrical triangle. And I can see that we peaked up over here and we've never really recovered since. And I don't think this is a good investment either. Because we had this descending channel, I think it's called. Yeah, and descending channel. And basically we've broken down from there, and I don't really see this going anywhere anytime soon. Here we've got Rentokil again. It's been a good investment over time, but again it's broken down. We've got BT Group, which has just been a dreadfully awful investment over time. Over time, the shares have just collapsed. We've had a rally back into 2016, then we've just collapsed again. We've got Associated British Foods PLC. I can see there's been a bit of this falling channel over here. And then we've kind of popped up, but again, this hasn't gone anywhere since 2013. Think about the US stock indices and some of the US stocks like Amazon and Tesla and Facebook, Meta platforms. They've gone absolutely crazy. I'll be covering them in a future video. Got Antofagasta, which is in the mineral sector. And this has been a decent breakout, but again, it's not really done anything since this high back in 2011. Been a decent trade off these lower levels when there was a crash in Chinese demand in 2016 for resources, but since then it's not really done that well. Then we've got Legal General, basically one of the biggest insurers in the UK for things like life insurance, and this company is basically presenting with a head and shoulders pattern over here. You can see they've got the left shoulder over here, got the head, and we've got the right shoulder over here. It's looking to basically collapse, really. So this isn't a good investment either. If we measure it out, we've got much, much lower to go. And as you can see, since 1999, we can look at the price range. You can see we've only gained 52% in all that time. That's still the peak at the moment. We've gained 16%. Even in UK houses, you could have gained 200-300% in the same time period in terms of investment, or the S&P 500, which has returned a lot larger. So this isn't a good company either. Rolls-Royce has gone on an absolute parabolic move recently, fueled by obviously the likes of it being an aero defense company. Recently, what's been going on with geopolitical tensions. But again, over here, we've not gone anywhere since 2015, so this could be a breakout. So this could be a good investment, but we're waiting to see really to confirm the breakout properly. Got another insurer, multi-line insurance company, Aviva. Again, not a great investment. With a lot of these British stocks, they're not great investments at all. Have held over a long period of time. Again, this has just been trapped in this sideways range, as you can have a look see over here. It's just been trapped. So it's maybe good to buy at the bottom and sell at the top, but in terms of a long-term investment, I don't think it's a good idea either. Then you got Smith and Nephew PLC. Again, it's been in an uptrend over time, but things have reversed. And back in 2019, it hit a peak, and we've been falling in this orderly descent ever since. I don't think this is a good investment either. Again, none of this is investment advice. This is just me looking at the charts, trying to see what's happening in the FTSE 100. Next, we've got wholesale distributors Bunzl. It's basically been an uptrend, but again, there's been very little progress since 2022. It's a decent investment, but not the best. So we've got Informa. It still hasn't even taken out its pre-COVID high yet, to be honest. So you're looking at lower levels on this one. or it needs to at least have a breakout. But again, it's done nothing really since 2000. We got Segro over here, which is a real estate investment trust. Again, this stock has seen better days. It's not a good investment. You can see it's just gone sideways since 2008, really. We had a peak in 2007, but that's all I can see. Aha, we've got an interesting chart here. This could be a descending triangle, and we could be breaking down to lower levels. Advertising and marketing services. Again, this is probably another bad investment, to be honest. I can see this breaking down over time. Next, we've got Burberry. So this hasn't performed really well either recently. It's basically broken down. I did draw on this bull flag before, but it never really paid out. And we've just been falling since 2010. It's not doing anything. It's just in free fall. Again, people try and catch falling knives in the stock market, but this isn't a good investment. It could go a lot lower. And don't think you're buying cheap here and you'll be able to sell up here. There has to be substantial improvement in the business profit margins going forward for a rally to occur. Again, Croda International, it's been a decent uptrend over time. Again, that's broken down, so I can see this going a lot lower as well. Let's have a quick look how many names there are left. Because I know this is going to be another long video. No, there's only a few names left, so we'll quickly blast through them quickly. Because I know time is important as well. So we've got Coca-Cola, HBC. This is beverages, non-alcoholic, consumer non-durables. Again, it's not done anything since 2019. We've got Halma. That's basically been in a nice uptrend over time, but yeah, it's been in a nice uptrend over time, but that might have stopped now because it hasn't gone anywhere since 2021. Next, we've got Intercontinental Hotels. So next we've got Intercontinental Hotels. Again, this has been a good company over time. You can see there's been this symmetrical triangle. We've broken out, we've retested, and we've gone higher. JD Sports once was a good investment, but right now I can see this potentially breaking down as well. There could be room to the upside, but we haven't made a new high since 2021, which is a bit concerning considering the US indices are record all-time highs. We've got a investment trust, mutual fund in Scottish Mortgage Investment Trust. Again, this hit a parabolic level in 2021. It's not recovered since. We've got Entain. And what I can see with this is basically the owner of Ladbrokes, other casino gaming companies. I can see this is in a downtrend as well. I drew this line on a while ago, and I come back to the chart, and I can see that this descending triangle back then that I was trying to model for. So with the descending triangle, you can basically measure the move. If I measure that move over there, and I project it lower, we can see we've reached our target. But again, the likes of Flutter Entertainment are probably better investments as more of gambling has traditionally moved to online markets. So that's probably a better investment. Next, we've got Next. And this has basically been a good investment over time, but since 2015, it hasn't done an awful lot. We've got Sage Group over here. This one's had a nice consolidation, broken out to a high level, so this one could be interesting. Spirix Sarco Engineering. It's an industrial machinery company. Again, I drew on basically a falling, descending channel over here. It's a counter trend channel. It's basically a bear flag, what I call a bear flag. And this is basically broken down as well. So this isn't a good investment either. Could even visit this trend line. Next, we've got Smurfit Kappa. Again, this one has made a high since 2021, but it's getting there. A terrible investment this is really. International Consolidated Airline, ordinary. Problem with this is it's a trade, but since this peak in 2018, it's been looking really, really bearish. You can see there's a ascending triangle pattern over here. So that doesn't look like a great investment either. Got Schroders, which is investment managers in finance sector. Again, terrible investment. Let's have a look. It's not gone anywhere since 2013. Next, we've got Seven Trent. Again, people always complain about higher water bills, but in terms of the dividend, maybe shareholders are benefiting, but I don't see much benefit in terms of the share price performance. Since 2016, it's unchanged. Then you've got United Utilities. Again, that's been in a steady uptrend. But again, it's not doing anything exciting since 2015 either. Got Admiral Group, another insurer. So I can see this being a bear flag and potentially breaking down. Although it could rally and just pop out the top. Here we've got another British supermarket in Sainsbury's, food retail, and we can see this has just been in a gradual downtrend over time. It's not really gone anywhere. The only real return you wouldn't be making is off the dividend of 4.73%. But to keep it with inflation, potentially double-digit inflation in the past that we've experienced, and obviously it's even now mid to higher or lower single-digit inflation, it's still a problem because you won't see the return on your money. Got Intertech Group. Again, this has been in a long uptrend over time. Whitbread, this is a hotel resort, basically behind Premier Inn. I don't really see this going anywhere since 2013. It's not really gained anything. We've got Centrica, British Gas. Today is above. They've had a nice rally off the low over there, I can see, but you had the symmetrical triangle breakout and this high point in 2013. It's just been continually going down over time. So as a short-term trade, maybe it's okay, but as a long-term investment, maybe not the best. Melrose Industries, which is an aerospace and defense name, so that's been a good investment over time for sure because of what geopolitical tensions. Then we've got life and health insurance, St. James's Place. This one's obviously had a lot of problems. I can see just from looking at the chart, you've had the breakdown from there. You could potentially break down again. So don't think by buying cheap here, you're going to be able to sell up here. It's unlikely to recover to these levels unless the business substantially changes around. Got Mondi PLC, which is containers and packaging. Again, with this investment, it's gone sideways since 2015. It's not been a good investment, really. Then next, we've got Pearson Group. This one's looking interesting. Could be an inverse head and shoulders pattern over here. With this being the head over here. If I measure a move from there, from the neckline approximately, we could have a higher move, but again, trading reversal is tricky. It's much better to trade continuation. And what I mean by that is basically with continuation, if something's been going up in an uptrend for a while and we've had some sort of consolidation sideways, more like often than not, you'll get a breakout to the upside, a violent move to the upside, because basically the volatility reduces over time. So, for example, price per hit goes up, goes down, it goes up again. You can see over time you get big violent breakouts to the upside. Whereas trading reversals is trickier. Sorry. So we've got Smiths Group PLC, which is electrical products company. Yeah, and I can see since 2018 it's not really gone anywhere, so that's not a good investment. Let's have a look at Auto Trader. This one's technology services, basically where you go to sell your car. Since 2021, it's not really done anything, but it has had a substantial growth in the past. Phoenix Group, it's not done anything since 2010. Again, it's life health insurance, it's a financial company. Pershing Square. So this is investment trusts, and I can see over time this has broken out this symmetrical triangle over here to the upside. So this has been a really good investment in the FTSE 100, probably one of the better ones. You've got Endeavour Mining over here, and this has basically gone sideways. It's a precious metals company. It's a non-energy minerals. It's got a decent dividend yield, 3.77%. Again, just sideways action. There's not enough price history for me to say whether this is going to be good or bad. And we've got precious metals, I believe silver, Fresnillo, based in Mexico. And over time, this has basically underperformed silver rapidly, I would imagine. As we can see, we've had a descending triangle of sorts here. We had this broadening type of structure, and we've basically broken down. And I can see maybe a rising wedge happening here. Maybe it might break down again. Even if silver goes higher, this isn't performing really well. It's not a good investment. P&M European, which is a discount store. Over time, it's had decent upside, but again, looking at the chart, it's uncertain what's going to happen next. Barrett Development, part of the home building consumer durable sector. Since 2008, 2007, home builders haven't really recovered, really. So that's not a good investment at the moment either. Got Kingfisher, home improvement chains. So behind B&Q, I believe. It's just been sideways since 2002. Again, not a good investment. So as you can see, the majority of the investments that we've covered so far, the stocks that we've gone through, haven't been good investments. M&G PLC, financial conglomerate. And again, very little price favor on this, but since 2020 hasn't really done anything. Berkeley Group Holdings. This is a real estate investment trust, and over time, it's generally performed fairly well. So this is a good example of what a good investment looks like. You can see you've got this trend line. It's been holding consistently over time. So any dips on this is potentially a buying opportunity. But again, I like to see is the revenue over time growing. Let's have a look annually, and it's staying stable, stable around 1.2 billion per year. So it's stable revenue really, but it's nothing impressive. Next, we've got DCC, which is utility gas distributor. We can see with this, we had this symmetrical triangle here. It broke to the upside, and we've not done a lot since 2015. So that's not a good investment either. FTSE Investment Trust PLC. It's an investment trust mutual fund. This is a good chart. I like this chart. It's gone up gradually from 200 pence a share, let's call it, all the way to 1,000 pence a share. So that's done basically a 4 or 5x since 2009. So that's been a good company. It continues to be a good company going forward by the looks of it. Got a Weir Group. Again, it's just gone sideways since 2011. Not a good investment. Got a Rightmove, and this is looking like a head and shoulders pattern to me. Maybe the higher interest rates are starting to have an effect on the UK housing market. If this head and shoulder plays out, call that a neckline over there. Might have a lot lower to go up. It's unlikely. I don't like trading head and shoulders or reversal patterns because there's a lot less certainty in terms of percentage of achieving success on the trade. It's something to be aware of that this isn't a good investment right now. Since 2019, it's not done anything. Next, you've got Convatec. Since 2017, hasn't done anything. I'll just speed up because I'm aware it's becoming another long video, so we're almost there. Don't worry. Thanks for staying with me at this point. And then we've got Land Securities Group. That's just been another home real estate investment trust. And it's just been in a downtrend since 2015. It's been quite a consistent downtrend as well. Been like a channel. Next, we've got another home builder, Sailor Wimpey. And again, this one, since it collapsed in 2008, it's been nothing but it's had a bit of a rally off the lows in 2009, but over the last, call it 7, 8 years, it's not really done a lot of good really in terms of returns. Got Airtel Africa. Again, this is nicely doubled. It's done a 2x since it's basically IPO'd over here. But again, I need to see more price behavior in terms of trying to predict that. Got DH Smith, which is containers, packaging, process industries. With this, we've basically gone sideways since 2015, so it's been nothing but sideways action. Again, that's not great. Again, another home builder, Persimmon. And with this one, it's basically broken this trend line over here. We've had a nice down leg. We've had some sort of attempt to rally. We've had this type of broadening type of structure over here, and we're looking to recover. But again, UK home building is a weak sector to invest in. Got Aberdeen PLC, which is investment managers. Over time, since 2015, this has been stuck in a downtrend as well. So it's not been a good investment, really. Again, in any rallies, it's been a good short, but it's not been a good investment. We've got RS Group, which is a wholesale distributor. And I drew this line on a while ago. I haven't looked at the chart since, but it's almost played out perfectly, to be honest. All I was simply projecting was this to there. And I was just projecting it from basically where it's going to break down from, and it's perfectly hit my target. Got Beasley PLC. This has been in a gradual uptrend over time, so it's a decent investment. Hiscox, so this hasn't, it's basically multi-line insurance, hasn't recovered since 2019. And over here, it seems to be more of a bear flag, to be honest. So looking to potentially break down. Hargreaves Lansdown, which is an investment manager, it's a stockbroker in the UK. And again, you had this bearish structure, this descending triangle over here. And we broke down, so that target was made. Again, over here, we had a bullish symmetrical triangle, we broke to the upside. So overall, if this becomes a head and shoulders pattern, this could be very concerning. As again, there's a lot of competition now in the UK stock brokerage space. There's a lot of different platforms like AJ Bell, Interactive Investor, Interactive Brokers. There's a lot of ISA offerings, stocks and shares ISA offerings. It's a very competitive space, so it's obviously probably impacting profit margins. You've got Unite Group, that's doing a decent symmetrical triangle over here, but it could break down as well. It's looking weak with that candle over there on the monthly. Cardo, once a winner during the pandemic, it's been going lower ever since. Looks like it's looking to break down. It's not a good investment. There was a good investment back here though. Then it just broke to the upside and it's gone down since. Johnson Matthey Chemicals, that's looking like a bearish investment as well. We've got this descending triangle over here. We've broken down. Also had this head and shoulders pattern over here, which played out. Which is basically the COVID dip. British Land, Real Estate Investment Trust, it's just been going lower. Bear flag go lower. Had this attempt to rally, gone lower since 2008. It's been a terrible investment. Finally, Fraser's Group. This has been a decent investment, but since 2014, it hasn't really gone anywhere. So as you can see, the majority of the stocks I've covered in the FTSE 100 are looking weak. So what does that mean for the index? Let's just go through it again. But thanks for sticking to the end of the video. Your support's appreciated as always. You can see the FTSE 100 since 2000 hasn't done a lot, so it's not a great index to invest in. That's my personal opinion. None of this is financial investment advice. If you like the video, please like, subscribe, hit the bell icon, and I'll see you in the next video. Thank you, and goodbye.